Andrea Leadsom.
Thank you, Chairman. Ms Gadhia, can I ask you, how important do you think the Virgin brand is, as distinct from any other bank? The fact that you have this Virgin brand, a bit like a Tesco brand or something, it makes it, it speaks of more products than just banking. Do you think that helps your business model?
I think it does. Indeed, some objective external research says it does exactly that. So at the moment, although we're a very small bank following our purchase of Church House Trust last year, external analysis, not that we've done ourselves, shows that people are as likely to buy from a Virgin bank as they are from any of the big five. And I think the key to that, to be honest, is that so much trust has broken down in the banking sector that customers are looking for a trusted brand. And that we believe that trust comes from a package of things. It's our corporate ambition to make everyone better off with Virgin Money. And that's a sort of, for me, that's, if you like, a mutual model for the future. It's about giving customers a great deal on price and service, making a fair but not too high return for shareholders, creating a business where staff are happy and want to serve customers well and doing a bit of good in the world. And that's what the Virgin brand can bring to banking.
So if you're keen to see more competition, would you like it to be along the lines of an M&S bank and a Tesco bank and a Louis Vuitton bank for the wealthy? Or, you know, is that where you see it going?
You mean outside the sort of the current
outside of banking itself, yeah.
Well, let me put it this way. Despite what I've said about the existing incumbents, the very important thing, I think, is that we have the right expertise in banking. Again, you know, I think that the crisis has shown us that it's important that we have experienced bankers taking the banking business forwards and learning the mistakes of the past and creating new banks for the future. And so I think I have no view really on whether or not that should be a Louis Vuitton bank, although that sounds like a particular brand. But I do think it needs to be that banks for the future need to find what is their particular position in the marketplace, consumer champion, service proposition, price proposition, whatever that might be, digital branch, and really build on that and give customers a great deal as a consequence. But at the moment, banking seems so homogenous, I don't think customers have sufficient choice.
So then, looking at that, the sort of the idea of a sort of diversified group where financial services is just a part of it, could that also be partly a solution to the too big to fail question? In other words, where you've got other resources, other sources of income and so on to support a particular banking activity? One of the things that I should say before properly answering that question is that although Virgin Money is part of the Virgin Group, that's true from a branding position as opposed to a corporate structure. So we're not a subsidiary of a big Virgin holding. So you wouldn't be bailed out by any other Virgin entity if you got into difficulty?
So all of our capital and profitability is ring-circled to the banking operation, which I think is entirely appropriate. And so my own view is that no, every bank should be operating in a way that means that it's going to be achieving sustainable profitability for the long term.
Now, I think you've said that you think retail and investment banking activities should be split out, in other words, a sort of reimposition of Glass-Steagall. Is that right? And if so, why do you think specifically along those lines? And the reason for asking that is because, of course, as my colleague John just said, it didn't help in the case of Northern Rock, which wasn't an investment bank, and nor did it help in the case of Lehman's, that wasn't a deposit taker.
As I said earlier, my view on that is not necessarily that we should, cut the banks in half, but that maybe one of the banks that has both of those arms should be operating two separate balance sheets rather than a consolidated balance sheet, and that capital should be held separately in those organisations. And I think that would go a long way towards achieving what I'm talking about. The reason that I say it, to be honest, isn't just because of all of the arguments that we've heard about investment banking. It's because I fear that retail banking has been underinvested for a long time, and that running a separate balance sheet with separate capital and separate profitability would actually perhaps refocus organisations to really drive great service for customers and to compete most effectively in a retail marketplace.
Would you like to see the Lloyds HBOS merger undone? Would you like to see that split back out again?
To be honest, I really don't have a view on specifically what should happen in
But you do have quite strong views on competition and on the need to improve competition, and presumably, therefore, you would be concerned about the market share of the Lloyds HBOS combined entity.
Well, I think that Lloyds' current account share, I think, is 30%, and their SME share is 20%, and that's clearly significant, and something that I'm certain the competition authorities are looking at. Whether or not Lloyds and HBOS should be split up, I think, is a very difficult issue because of all of the work and appropriate focus that's actually happening there, I'm sure, to make that integration work effectively, and then to turn around and ask them to split it all out again seems to me to be very unfortunate. And of course, Lloyds have been asked by the EU to sell a package of assets that will, of course, reduce the impact of that big group on competition. And so from my perspective, making that asset sale effective would be going a very long way towards both not wasting the good work that's been done and creating a more competitive environment.
But just to press you slightly, because clearly Lloyds HBOS, that is an enormous entity with an enormous market share. You're keen to see smaller, fleeter of foot entities and more competition. So almost by definition, you must want to see that merger reversed.
Well, as I say, I think that it's a matter for public record, isn't it, that the EU have asked Lloyds to sell off some branches, including the Cheltenham Gloucester, the Intelligent Finance and the TSB brand, and I think that that will go a long way to creating some of those smaller entities that you talk about that we genuinely support. Mm.
And then just final question, what do you think about breadth of product offering in a financial services entity? Do you think it's important that they do have a wide range of services? Do you think that adds to the risk or detracts from the risk if they're offering full service retail and investment banking services?
Well, put it this way, when I ran the Virgin One account 10 years ago, we found that we were able to be extremely focused by only looking at a very small range of retail products. We're able to do them well, we're able to explain them well, we're able to train staff very well.
And what about risk specifically?
Well, of course, because this was a fundamentally retail product that everyone had full knowledge of, where we could absolutely work out customer behaviour from a risk perspective. We very much managed risk, to be honest. It was a very sound business that was appropriately, I think, deemed to be sound by external parties, including the regulators. So yes, I think there's something to be said for real focus and doing one thing very well. And I think that perhaps when the eye's taken off the ball across a range of complicated subjects, it's hard to do many things equally well.
Thank you.
Andrea Leadsom.
Thank you, Jayne-Anne. Ms. Botin, I wanted to talk to you about SMEs a bit further, but first of all, can you comment on a remark made by the Chief Executive of Virgin Money, who was just here, where she was suggesting that one way to create some sort of safer banking system would be to have banks keep separate capital for their retail operations and their investment operations. Can you just comment on that from Santander's point of view?
Well, in terms of crisis prevention, it's clear that how we approach regulation is important, and that the governance model and how the structure of the universal banks, in the case that you're mentioning of having investment and commercial banking within the same roof, the Santander model, and this is just one model. We're not saying this is what has to be for everyone. I believe, and we believe, that diversity of models is important for the system and for choice and for customers. But in that specific model of universal banking and how to allocate capital, our model is very much a model of subsidiaries. So we believe in separation between the different entities. So Santander UK is absolutely standalone from Santander Spain or Santander Brazil or the other companies that we have in the group. Within each of these companies, a very strict separation between that small portion that we do have of market risk, treasury management for ourselves and our customers. We, of course, allocate different amounts of capital to the business, but we don't believe that there has to be necessarily a very strict separation. But our model is very much based, and we believe it has a lot of merit in terms of crisis prevention and resolution for the system, is very much based upon the principle of separate subsidiaries.
So
per
just
countries.
to be clear then, you're allocating capital to each subsidiary. So the UK subsidiary has a separate pool of capital from the Brazilian subsidiary, for example.
Yes, and they're standalone and they issue in the markets, and there is no cross subsidies or relationships more than the services in terms of technology and all that, but not in terms of capital or funding.
So, for example, if your Brazilian subsidiary were to get into financial difficulty, would there be some cross-subsidisation from the rest of the group?
No. And in fact, Santander, we did have an issue 10 or 12 years ago in Argentina, and we actually followed that principle. So our subsidiary had issued debt in the market, and of course had been paying a higher spread than the Santander group would have done, and therefore investors were very much aware that this was a standalone subsidiary, and we actually followed that through. So we have done that in the past.
So then, because when we had Bob Diamond, I'm sorry, I'm slightly going off the tack of what we said we were going to discuss, but I think this is a very interesting point. When Bob Diamond was here last week, he was advocating that subsidiarisation would not work, and he gave, in fact, in my opinion, an incorrect example of Baring's failure to support his thesis. Would you say then that subsidiarisation would be an effective means of limiting this argument about too big to fail?
Yes, we believe it has a lot of merit. We do not believe it has to be applied to everybody. But we believe that too big to fail has to be complemented by other measures. And so interconnection or governance or subsidiarization are issues that would limit the amount of capital that you would need to apply to large systemic banks. Mm-hmm. We have done a lot of work on that, and we are very happy to share that, and we are actually sharing that with the regulators in different countries, including here.
Ask for a report on that, Chairman.
Are you giving evidence to the Vickers Commission on that? On the issue of subsidiarisation?
Yes.
You are?
Yes, so actually I was there last week, and I believe that's something I don't recall if we were going to share it, but we can do that. We're very happy to do that.
Thank you.
May we request a report on specifically that point?
If you have something you'd like to
Yes.
send us, we'd be grateful to see it.
Thank you. And can I just ask one final question on that? Have you found that it has affected your credit rating, the fact that you have these independent subsidiaries standing alone in different countries? Do you find that limits your ability to access the capital markets in those countries?
No, on the contrary. I mean, the fact that we access through different, names, and actually now it's mostly Santander. Banesto, the bank I used to run, is the only exception. But it allows us to access markets, I think, with greater ease and offering more choice to investors.
Thank you. Just coming on briefly, if I may, to SMEs.
A brief last rejoinder.
Very brief then. The Future of Banking Commission said that since the financial crisis, difficulties faced by SMEs have manifested themselves through higher costs, problems in getting credit extended, and sudden and unfair changes to terms of contracts, such as the withdrawal of overdraft facilities. Would you say that Santander's rapid growth in SME share is down to that dissatisfaction of customers?
SME lending is one of the hardest things for a bank to do and to do well. And I think there's a lot of opportunity for us to do much better in that. And that will be one of my priorities in terms of growing the UK business. So we want to have a more balanced mix between SMEs and medium-sized companies and retail. Today we're 80% retail individuals. But definitely, yes, I believe there's a move by SMEs to have several, not just one, banking transactions. I think this is very good, not only for the system, for us as providers, but also for the small companies. Just relying on one provider is probably not advisable. Having too many, probably it's also not possible because you have to manage all these relationships. But having at least two, I think, is a very good trend. And from our research in the UK, that seems to be happening, and we are clearly benefiting. We incorporated 1,500 new customers. It's not a huge number in SMEs, but remember we're coming from zero almost 3-4 years ago. And so we're very happy in terms of the response that our product, and I know this is difficult to quantify, it's actually not quantifiable, but what we're trying to do is invest in our relationship managers and trying to have, as I was saying before, them understand the business of the entrepreneur or the small company, and that's not easy, but that's really where we've made the biggest investment, and that has been one of our priorities.